All right, welcome everyone. Welcome to the trade findings and adjustments for Thursday morning, the 9th of April. The markets will be closed for Good Friday, which you're thinking to yourself, it's good that we're not trading tomorrow. With that said, our markets today are killing it, right? That's the best way to say it. Our markets today are absolutely killing it. We have the Dow up 2%, up 453 points. S&P up 1.89, 51.94. The Nasdaq's the laggard today, only up not even a percent. It's 79.33. So here is the question. We're up today on two reasons. First, the Federal Reserve unveils details of the $2.3 trillion in programs to support the economy. And so here's the short and skinny. For all intents and purposes, the government had to give a pass on the punishment or the caps that Wells Fargo is enduring so that Wells Fargo can dole out this money to all the people that they want to. Wells Fargo has a bit of a punishment is the best way to say it. They can only lend out X amount of dollars because all the people that they ripped off and lent out to people that had no right getting a loan. And basically yesterday, the government said, okay, the caps are not there. Loan to anyone and everyone that you want to. Well, the other banks then came back and said, WTF, right? What the hell? If you're doing that for them, then maybe you should increase our loan capacity and loan reserves and blah, 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 blah. And so what basically happened overnight is that the Fed said, okay, loan to everyone. We're going to back these loans. Banks do not and will not lose a penny on any loans that they're putting out to this program. Not only that, but give money out to everyone. Loosen up your requirements, loan it to everyone. We've got your back. And all of a sudden, it makes it really interesting for people to go get loans. In fact, it's actually the pricing is so amazing right now, down at 3%. And people are going to say, well, aren't loans at 3% already? And the correct answer there is no. They are for residential housing, but for commercial, they're still at 6, 7, 9%. So to have a loan for commercial real estate and a loan for a business that's not at 5.5 to 7 basis points right now, it's down at 3. It's ridiculous. It's free money. It's just an amazing, amazing opportunity for the for business in general. So, short answer, the spigots are open. If I was a business owner of 100 people or more, I would task my human resources and I'd be saying, fill out the forms 3 or 4 different ways, get us this money, get it and give it to us. And hence, plain and simple, our futures went from being flat to slightly down to being up. Now, interesting, because let me find the other thing that we're not hearing at all today. Where is it? This is not it. Give me a quick second. I can't find where I put it. Oh, I thought I had, there it is. Can you believe that our unemployment claims right now jumped to 6.6 million? We've lost 10% of the workforce, or 16 million people are filing for unemployment. 16 million. 3.1, 3.3, 6.6 million people in the last week. And notice how the Fed stated what they're going to do to offset this bad news. Now, in the state of Utah, you get $460 a week for unemployment. The Fed puts in an extra $600 now a week. Unemployment is $1,060. It's $4,240 a month. If you were to ask me, when I've got, a $3,500 mortgage, I couldn't live off of $4,240 a month. I can't. Someone might say, well, Kevin, you've got a champagne craving on a beer budget. You've got champagne taste, but you live on a beer budget. Plain simple, I couldn't live off of $4,240 a month. But the median income in Utah sits around $46,000. And that's before taxes. That's gross. That's not net. So in my state, people are making more money for the median income. I want to say poor, but that's not fair either. Most of these families are two families, two incomes that are really making in that $92,000 range. But my fear is right now that we have the lower earning individuals that, not saying their job's not important. Some of these people are nurses, I get it. But some of them now are getting paid more to sit at home, and I wonder how quickly they will come back to the workforce. I'm thinking of the moving industry I worked in for years. Moving is a awful experience for the people that are moving, for the drivers, for the packers. I mean, it's labor intensive, it's taxing on the body, it's brutal. Those guys really don't make a lot of money. And how much easier it would be for them to make $48,000 without taxes taken out than to make $46,000 with taxes being taken out. I'm hoping that the federal side, the extra $600 a month, will be short-lived, and that'll be taken off so that people do have an incentive to get back to work. With that said, a business loan, I think I would love a $100,000 business loan at 3%. I don't even have to start making payments on for a year. I just would have a hard time justifying, well, the market was down 1/3%, so there goes 1/3 of my income. Yeah, it happened for 1 month, and for my guys, we were down 10% on general. So they'd look at me and go, Kevin, I think you're calling bull crap, but if you can put this money to work, we'll give it to you. If they're going to do 2.5 yearly payroll numbers, wow, I could get an amazing loan that I don't know. I'd be crazy not to find a way to put that money to work. But what my worry is, we just got 6.6 million people out of work, swept underneath the rug right now because the 2.3 billion and who can grab that money has now been the restrictions are just give it to everyone, whether they deserve it or not. Get it out, get it out, get it out. That's what's being said. It scares me because some people are not going to pay off those loans. If you're one of the, I kind of want to say I'm conspiracy theory people. If you're one of those that looks at it and says, "Oh, we're going to go in debt beyond belief. Our kids are going to pay for our debt." Yeah, we're screwing over the kids. Future taxes, we're hosed. But I think we're hosed anyway. I mean, in real life, there's no coming back from this. We blew it. We're so far past paying this off. It's just how far do we push it down the road? How far do we kick the can down the road to maintain our reserve currency status? And that reserve currency status gives us a lot of perks. And for what it is, they're off down the road, and that's all that matters. We're gonna kick that can forever. Oil jumps 12% because it looks like they're going to be cuts by Saudi Arabia, Russia, and OPEC. And here people thought Trump was full of crap, saying, oh, 10 to 15 million. Reports are now as high as 20 million barrels. For someone like Russia, I scratch my head. Because if Russia could only ship out 10 million barrels a day versus 13 or 15 million barrels a day and get paid the same amount as if they were shipping out 15, that saves them 3 to 5 million barrels a day that they can sell down the road sometime, hopefully at a higher price. I don't understand where some countries can't do the math and figure out how to make this work. Now, well, Kevin, in that case, OPEC was doing the right thing back in the day. I disagree. OPEC had some controls that we don't have when it's benefiting the world, not just a certain group. Then yes, I think people should cut their oil. They should be able to make more money on it. That's the common sense that says, yes, I agree with it. They're right. When it doesn't benefit the whole group and benefits a small amount of people like OPEC and only OPEC, that's where I will have a problem with it. So, what I'm trying to say here is this. Make the damn cuts, Russia and Saudi Arabia. Do the math. The math is pretty simple. The math says that if you do the math, then plain and simple, you're going to be okay longer term. And it unfortunately is too hard for some people to figure out and to do the math. The math is just too hard for some people. And that's where we're running into some problems. Chevron's doing pretty good. ExxonMobil's getting killed. There's a night and day difference, and for whatever reason, We're going to help sustain the oil industry, but please don't think cuts are a catalyst. Cuts are not going to be a catalyst. It'll continue to hurt refineries and producers until oil is back at that $50 a barrel. We do not have a catalyst for the oil energy. We're just trying to stabilize pricing. And stabilized pricing is much different than earning a profit. So, with all that said, there's my oil pitch or my energy pitch. Disney. Oh, this will be my trade today. If you're not in Disney, you need to get into it. Disney just did in 5 months what it took Netflix 7 years to do. Disney does not have the market love yet. They're still not running their cruises. Their parks are closed. Their movies are not coming out. I see the bad news on Disney. But their revenue growth, what's going to spark their revenue into this year, they just surpassed their 40 million for 2020. They just did it in 5 months. At some point in time, they're going to get the love from the market. Well, Kevin, how many of those are paying subscribers? As I've read articles, 40 million are paying subscribers like me that really paid it all up front. 10 million are non-paying subscribers through Verizon. All that means is Verizon paid for them. It's not like Disney's giving away for free. Verizon's paid for them, so there are 10 million people to get hooked. And even if half of them join, I mean, we're talking about $60 a month for crying out loud. This is not breaking the bank for people. It's a cheap babysitter for kids. They're killing it. They have a revenue model or a subscription model now that is significantly faster than the number one company that's doing it, Netflix. Content. They're working on it, and they have a lot of content. Now, some of it's older content. Some of it is children-based. But for what a price, I mean, I'm looking at it, I'm thinking, boy, I've got Netflix. I've got Amazon Prime, so I've got Prime Video. I've got Apple, so I've got Apple Video I get free with upgrades and stuff. I've got Disney. For all those people that thought Netflix was it and it would dilute the market share, I think we're finding out that they're pricing points that are fabulous for Disney. Pricing points where people can make a significant amount of money. So if I was looking at a position to put on today, I want to take the good news of Disney, understanding that, hey, it sounds like companies are going to be given a pass on companies are going to be given a pass on their positions, where they're at. I have Disney already in this account. I've got 6 June 150s. So if I was looking to place a trade today, I want to piggyback on the good news of Disney. I think we will get up to 150, but we've lowered the cost basis so much that I think we're in good shape. For a new trade, if you were to simply just pick up a couple contracts of the Disney June right now today for pretty cheap. It's not the June, it's the June. It is. It's the June 2021 150s. Giving yourself a year and a couple months. It's a pretty easy trade to put on. It's relatively cheap. We're talking about $750 that just says all we've got to do is go up sometime in the next year and 3 months. This would be my trade. I'd be looking to put it in. Again, relatively cheap. For me, I'm dollar cost averaging. But get into a Disney June 18th, 2021 150 call, and don't get out until you have at least 100% return. That's what I'd be looking at. That's what I'd want to do to complete today's order. Something that I'm still looking out 12 months down the road, and I feel it's a great position to be in. What else do I have? Interesting. Corporate earnings estimates for 2020 are likely to be revised downwards substantially in the coming weeks. How hard could the S&P hit? I received this from a friend, and if I'm not supposed to have DWS in there, please let me know. But I saw no copyright on it. It's just general information and them putting a suggestion out there. So pretty interesting. It's a good read. Look at the standard deviations. Obviously, we shouldn't go to 3 standard deviations. Usually 1 is what you're looking at. So corporate earnings are going to lag significantly, as we already should know. It's not a matter of making it up. It's a matter of looking forward. And if anyone doesn't think that corporate earnings are going to come down by at least 10%, your head's got to be in the sand. Your head is in the sand somewhere. Understand that corporate earnings are going to come down, but what kind of pass will the market give corporations? I was significantly worried that some stocks would get crushed. I am no longer worried that stocks are going to be crushed, as I'm seeing Levi's and how awful their earnings were, and they were hardly down at all yesterday. Banks are coming through, and it sounds like banks are going to get a pass. So next week will be a no sleep week for me as I look at futures and look at bank earnings and have to read through Schedule Ks and everything. It's going to be a killer. But I think we're going to see some, from what I'm hearing and what the price reaction is on stocks, I think banks are going to get a huge pass as we're trying to get on their good side, so they'll loan out this money to individuals, and so that they don't take a hit for something that technically maybe wasn't their fault, right? That's the key word. Technically, maybe wasn't their fault. So it'll be interesting to see, but it might be amazing to see earnings be a catalyst with how god awful they are going to be. It'll be shocking to see how that goes. With that said, any questions you guys have that I can maybe answer for you, or try to answer for you, in regards to anything regarding to the market? All right, let's if I don't see any coming in, guys, markets close tomorrow for Good Friday. Have a wonderful weekend. And any stock you're watching for, really not particularly. I mean, if anything, I think they're all beaten down. And I've got my list that I'm pretty much, I don't know, that I pretty much have done all my research on. So in all honesty, here's my typical list. But for earnings in general, I wouldn't touch airlines. I wouldn't touch healthcare. I wouldn't touch retail. I wouldn't touch energy. But within certain sectors, man, I think Costco, Target, Walmart are going to knock it out of the park because they have an online part to their business that should just kill it. CVS. I'm letting CVS run. I'm letting CVS run because people are driving up to their counters for their pharmacies and they're putting their orders in via window. I don't have a particular stock, but I think the banks, I think technology, I think there's certain pockets of stocks that will most likely do better than most. But I don't have a specific list or a set that I am looking for earnings that are outside of my core holdings. Apple, Boeing, Bank of America, Disney, Ford, Facebook, JP Morgan, MasterCard, Visa, Micron, Newmont Mines has been an interesting one. Target, Under Armour, Visa. Those are the ones that I'm focusing on, feeling like I'm getting a ridiculously cheap price, and that every single one that I just mentioned there will be significantly higher a year from now. Whereas I can't tell you if the oils will do that, where some retail stocks will do that. Energy, I just don't see the catalyst. There's some sectors, even healthcare, that's getting beat up right now. I just don't see the catalyst a year from now for some of those type of companies. So there's my stay away, and there's my things you should be looking at right there, listed out verbally. I actually don't have Uber. That is one individual that has an Uber position on. And if you take a look at it, the cost basis is $295, trading at $195, but they were smart and they have a 3-to-1 reward to risk ratio, right? You can make $7 spending $3. So it's like 2 1/3 reward to risk. And they went all the way out to January 21. So that is just an individual that has that I happen to see. I would not suggest you be an Uber. But this individual has given themselves enough time to have it come back. All right, guys. Hey, have a wonderful weekend. Happy Easter. Happy celebrating the resurrection of our Savior by hiding Easter eggs. Pleasure to be with you. Grateful for a 3-day weekend. Go recharge your batteries, and I'll see you guys on Monday. Appreciate your time, and I look forward to talking to you on Monday. Goodbye, everyone.